Right now, we're in one of the most confusing market environments psychologically. We're not crashing, it's not euphoric, we're just kind of stuck and very macro driven. Jane Street just got sued over what allegedly happened during the Luna Terra collapse back in 2022. People have been digging through blockchain data, trying to figure out who benefited during that $40 billion wipeout, which is huge. Think of liquidity like oxygen for markets. When oxygen is high, altcoins kind of explode. When oxygen is limited, markets move slower, investors become selective, and speculative assets struggle. That distinction is everything. A bull market does not mean the price goes up every single week. Real bull markets will move in waves. What I think happens next, my base case for the next month is Hey everyone, and welcome back to the Market Runup, the show where I break down crypto macro and market psychology in a way that actually makes sense and doesn't just rely on hype and headlines. I'm your host, the Blonde Broker, also known as Erin Gambrel, and if you've been watching the markets this week and thinking, why does everything feel so choppy? Why aren't we pumping? Are we bullish or are we bearish? You are not alone. Because right now, we're in one of the most confusing market environments psychologically. We're not crashing, it's not euphoric, we're just kind of stuck and very macro driven. And those environments are actually the hardest for investors emotionally because there's no clear narrative to cling to. So in today's episode, we're gonna slow everything down and really break it down properly. What the market is doing this week, the actual data and stats, the biggest macro and crypto news, maybe what institutional money is likely doing behind the scenes, and what I personally think happens next. And this is new, but at the end of the episode, I'm gonna answer 5 audience questions that were sent in and talk about how I navigate choppy markets like this. Because let me be very clear with you. This is not a random market, this is a liquidity-driven market. And before we really get into today's episode, I want to take a quick moment to talk about why I started the Market Runup in the first place, because this show is actually very intentional. As many of you already know, I'm still actively hosting my other podcast, Not Your Average Bros, with my best friend Ashley Decan, and that show's more conversational, fun, and kind of lighthearted. We talk about the culture, markets, and everything in between in a very, very unfiltered way. But I realized something over the past year. There's a lot of beginner investors and new crypto users and young professionals who are just trying to understand the markets and they feel overwhelmed. They hear terms like macro, liquidity, ETF flows, inflation, and it all sounds complicating and a little bit intimidating. And that's exactly why I want to fill the gap. The Market Runup is not meant to be overly technical or elitist. It's meant to simplify what is actually happening in the markets and help people build real financial literacy in a way that feels digestible, calm, and clear. Because the reality is the world is changing financially. More people than ever are investing and learning about crypto, and they're trying to understand how macro conditions impact their money, and they deserve education. On top of that, I've also been building behind the scenes. I launched my own marketing agency called Inside. I post about it a lot with my best friend Julian. So I've been a founder and an operator, and I've really enjoyed building during this season. And if there's like one thing that you guys know about me, it's that I'm a go-getter. I'm pretty driven, and I love to work on successful things. I don't just post content to post for the sake of content. So this show is a reflection of that mindset. It's about discipline, education, market awareness, and helping people feel more confident navigating financial markets instead of being intimidated by them, frankly. Because at the end of the day, understanding the markets isn't just for traders or analysts anymore. It's actually becoming a life skill that we need to harness. And if I can make it feel more accessible to just one listener each episode, then this podcast is doing exactly what I created it to do. So what's in the headlines? I woke up today and everyone was freaking out about Jane Street. What just happened basically, this is one of the biggest trading firms in the world. Jane Street just got sued over what allegedly happened during the Luna Terra collapse back in 2022. The claim is that they might have had insider information, pulled out tens of millions in the system of stablecoins right before the entire ecosystem imploded. And now it's resurfacing years later because people have been digging through blockchain data, trying to figure out who benefited during that $40 billion wipeout, which is fucking huge. And if the allegations are true, that would suggest that some sophisticated firms were trading with a lot of information. But the importance of that is that it's still an allegation. It's not really proven facts. So we'll see what happens, but CT's definitely turned the narrative into one market maker controls the market. Experts are already kind of pushing back on that idea. And the bigger takeaway here isn't that one firm controls crypto, right? It's liquidity. It's all becoming a bigger part of crypto's story as the space matures. And if we talk about the full market and break that down, let's talk about what is actually going on statistically and structurally. Right now, the total market cap is consolidating rather than trending aggressively upward. We all know that. Bitcoin's trading at a mid to high 60K range. Ethereum's slightly lagging around the 2K range, and Bitcoin dominance is elevated. Now let's pause there because Bitcoin dominance gets thrown around a lot and newer investors don't always understand what that actually means. When BTC dominance is rising, it means more capital is flowing into Bitcoin compared to altcoins. Think of it like this. If crypto is a risk spectrum, Bitcoin is considered safer asset relative to altcoins. So when the market feels uncertain, money rotates into Bitcoin first, not meme coins, Bitcoin. And that's exactly what we're seeing right now. Why does the market feel slow? A lot of people are saying the market's boring, or the market's dead, or there's no momentum. Here's the reality. The market is consolidating after we had a leverage reset. Let me simplify that. Imagine a rocket that launches like way too fast. Eventually it's gonna run out of fuel and it's gonna have to stabilize before the next move. That phase is called the consolidation phase. In crypto terms, that means we have less aggressive price moves, we have more sideways trading, more fake breakouts, increased sensitivity to news, and that's exactly why we're seeing that type of environment this week. My favorite topic, let's do macro. This is the topic that is super important and many crypto-only investors actually completely ignore it. Right now, crypto is not trading in isolation. It's trading as a global risk asset, which means things like interest rates, inflation, dollar strength, liquidity conditions. They're directly impacting Bitcoin and altcoins. And this confuses a lot of newer investors because they think, oh, well, why is crypto reacting to inflation data? Why does the Fed matter to Bitcoin? It's kind of simple. If global liquidity tightens, meaning less money is flowing freely in the economy, investors become more risk averse. And when investors do that, they reduce exposure to volatile assets. And yeah, crypto is considered a volatile asset class. Let me give you a real life example. Think of liquidity like oxygen for markets. When oxygen is high, markets run. Risk assets pump and altcoins kind of explode. When oxygen is limited, markets move slower, investors become selective, and speculative assets struggle. Right now, we're not really in that liquidity expansion phase. And that distinction is everything. Like everything. So, biggest news, I want to talk about one of the most important developments recently, which would be ETF flow. During the earlier phases, there was a lot of institutional demand. It was like having a steady buyer in the market every single day, but now the flows have kind of become more inconsistent. And when large institutions, the flow slows down, the market naturally just loses momentum, even if long-term fundamentals remain strong. It means everything's being pretty strategic and there's a huge difference. The retail investors trade emotionally while institutions position based on macro timing and liquidity and risk allocation. For institutions, where is a smart money kind of going? Behind the scenes, it's probably more likely that the larger players are rebalancing their portfolios or they're taking partial profits. They might be developing more capital selectively, which again results in this choppy kind of price action instead of vertical price action. Psychologically, this is the phase where retail investors get the most frustrated because the markets stop rewarding impulsive trades.
This show is brought to you by Token Relations, the leading investor relations platform for blockchains, protocols, and token issuers. You can read the Market Runup's weekly newsletter and best investor updates on ecosystems like Solana, Polygon, Avalanche, Chainlink, Aptos, Ripple, and more by subscribing for free or checking it out at www.token-relations.com.
But let's talk about altcoins, right? Because I know many of you watching your altcoin portfolios are kind of wondering why they feel weaker than Bitcoin. It's actually very normal. In uncertain environments, capital flows in a hierarchy. First, it's Bitcoin. Second is Ethereum and large caps. Third is altcoins. And last would be your high risk speculative assets. So when liquidity is cautious, altcoins tend to underperform. It doesn't mean they're bad. It means they're more sensitive to liquidity conditions. And right now, liquidity is pretty cautious, I would say. And emotionally, let me say something honestly. This type of market is mentally harder than a crash, because in a crash, at least there's clarity. In a bull run, there's excitement. But in a consolidation phase, there's uncertainty, noise, mixed signals, and that creates emotional fatigue for investors, which is why so many people start over trading during these sideways markets. What I think happens next, my base case for the next month is continued volatility with like a sideways bias, not a crash. I think we're gonna see a market that reacts heavily to more macro data releases, ETF flow shifts, equity market sentiment. We could see renewed attempts back up to the upside, but if macro conditions remain tight, crypto will likely continue consolidating or testing lower support levels before we see another sustained breakout. And this is important because markets rarely move in straight lines. They move in phases. So we have like expansion, consolidation, expansion again. And right now we appear to be in that consolidation phase. So I want to do something different. I'm going to read some questions that you guys sent in and talk about them. Question 1. Are we still in a bull market? So this is probably one of the most common questions right now, and I honestly understand why people are confused, because the market doesn't feel super bullish day to day. Personally, I do believe we are still structurally in a bullish cycle, but we're very clearly in what I would call a cooling or consolidation phase within that cycle. And let me explain that in simple terms. A bull market does not mean the price goes up every single week. That's actually a misconception that a lot of newer investors have. Real bull markets will move in waves. We have a strong rally, then a pullback, then sideways consolidation, then continuation. Right now, we're in that middle phase where the markets are digesting previous gains, retesting leverage, and they're waiting for the next catalyst. This doesn't look like a cycle top environment where everyone's like overly leveraged or irrationally bullish. Instead, it just looks more like a liquidity phase, right? Where capital is still here in the market. It's just being more cautious and selective. So if we zoom out, the structure still leans bullish, but zooming in short term, we got to look more macro driven. And you can actually do those two things at the same time. Question 2, why does the market react so much to news lately? Well, this happens because we're in a lower conviction market right now. When markets are extremely bullish and liquidity is flowing freely, news doesn't impact prices dramatically because momentum is already strong. But when the markets are uncertain, like right now, they become much more sensitive to headlines, data releases, and those macro events. Think of it like this. If the market is confident, bad news gets ignored. If the market is uncertain, even small news will feel really big. So when we get things like inflation data, ETF flow changes, or even broader economic headlines, the market reacts more aggressively because investors are looking for direction. Another simple way to understand this, when conviction is high, traders hold through the noise. When conviction is low, they react to every single signal. And right now we're in a phase where traders are watching macro signals closely to see what drives the headlines. Question 3, how are you personally positioning right now? I'm kind of approaching this market with a much more patient and strategic mindset rather than an aggressive one. I think normally right now I would have been just like throwing money at different altcoins and maybe low caps, because like choppy markets tend to punish impulsive decisions more than reward them. So I'm not going to be doing much. I'm going to like pay more attention to macro signals rather than like the short-term hype that you see on social media. So I'm asking myself, is liquidity expanding or is it tightening? Is the risk appetite actually increasing, or is it just temporarily reacting? Because in sideways and volatile environments, overtrading is one of like the biggest ways that investors lose money. You don't want to emotionally react to every single small move. So my strategy right now is like focusing on being patient, more observant, and positioning myself rather than like constant action and just click, 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 click trading. Should beginners be worried right now? No. Honestly, beginners should not automatically be worried just because the market feels slow or uncertain. In fact, sideways markets are often some of the most important phases for long-term investors, even though they don't feel exciting. When markets are kind of euphoric and pumping every single day, people kind of focus on chasing gains, right? But when the market is consolidating, that's when people have time to learn, right? And understand cycles, and they build smarter strategies. Another thing to remember is that not every phase of a market cycle is meant to be exciting. Markets naturally go through periods of expansion and periods of consolidation. Right now looks much more like consolidation phase than a collapse phase. So instead of viewing this as something to fear, beginners can actually use this time to learn the market structure, understand macro influences, and avoid making those emotional decisions that we talked about earlier. Because long-term success usually comes from how you handle the boring and uncertain phases and not just during the exciting ones. What does your actual day look like when you're analyzing the market? Okay, that's actually a really fun question because I think people imagine market analysis as something super chaotic, like I'm staring at charts 24/7 and refreshing price action every 5 seconds. Reality, it doesn't have to look like that. My day usually starts with checking macro first, not just every crypto chart. So before I even look at like individual coins, I'm looking at things like major economic headlines and any macro developments that could impact liquidity, because if macro is risk off, crypto always feels like, I don't know, social media has been pretty bullish lately, depending on how you look at it. Not every single altcoin, not every single narrative. I'm just looking at like the big picture first. Then throughout the day, I'm honestly not glued to charts 24/7 like people might assume. I spend a lot of time observing how the market reacts to the news and less about what people on social media are saying. Something people don't always realize is how much time you have to spend to filter out the noise. There's so much information online, like hot takes, predictions, you have breaking news, and not all of it actually matters. So the big part of the routine is asking, is this like real signal or is it just noise? On a personal note right now, I'm actually traveling a lot because I'm in the UK training boxing for the next month. So I'm just working out every day, and honestly, that's very intentional for my mental health. The markets can be pretty mentally exhausting, especially during choppy and uncertain phases like what we're in now. So for me, having a very constant workout routine and getting physically away from the screens has helped me create a clearer head. It just creates balance. So instead of being consumed by the markets all day, my schedule is more like market analysis, then training, then content, and then stepping away when needed. In my opinion, the best market decisions usually come from a calm mind and not from burnout or overanalysis or just staring at charts nonstop. How was the Winter Olympics in Milan? OMG, okay. So attending the Winter Olympics in Milan to watch ice hockey was insane. Like the atmosphere inside the arena was electric in a way that TV just doesn't capture it at home. Every game felt intense and emotional, and you could really just feel how big the moment was, especially seeing Olympic level speed and skill like on ice. It was the game to watch. And like huge freaking shout out to Team USA's women and men's hockey teams. Both absolutely showed up and delivered on the biggest stage. Just straight beasts. They got the gold. Watching it in person was definitely an experience that is unforgettable, and the energy in the arena was insane. It was like one of those moments where you realize you're witnessing history live, and you're surrounded by fans waving flags of different countries, and like the Olympics is just a memorable trip, right? Everyone should go. And then the pizza and the pasta, I could do a whole episode on that. I'm never coming home. Just kidding, I have to come home. But Anyways, that's a wrap up, guys, for this week's episode of the Market Run-Up. If this episode helps you better understand what's actually happening in the market beyond just headlines and the hype, make sure you're subscribed so you don't miss the weekly breakdowns. Because remember, the market doesn't move on narratives, it moves on liquidity, macro conditions, and capital flows. And right now we are in a positioning phase, so get ready. I'm the Blonde Broker, also known as Erin Gambrel, and I will see you guys next time for the Market Run-Up. That's all.